Are you a business owner and want some clear answers on some of the most important financial decisions you'll have to make? In this video, I answer some of the most frequently asked questions when it comes down to financial planning for business owners. My name is Quentin Chambers. I'm a wealth advisor, certified financial planner, and chartered investment manager. And over the last decade, I've been helping business owners make financially informed decisions, grow their wealth, and live with more financial clarity and peace of mind. Running a business can be difficult, from the seemingly endless tasks to all the responsibilities that cause you to wear multiple hats. This can cause you to feel overwhelmed with all the important financial decisions that you need to make. That's why in this video, I'm gonna break down some of the most frequently asked questions when it comes down to financial planning for business owners, from daily operations to strategic decisions, and knowing when to seek professional advice. So here's what you need to consider. It all starts with business valuation. Getting a professional business valuation to understand what your business is actually worth. This helps set a realistic asking price and provides insight into any areas that can enhance the overall value of your business. Then there's profitability and financial health. Ensure your financial statements are clear and up to date. Buyers will look at profitability trends, cash flow, and expenses to determine the viability of your business. And then there's your customer and revenue base. If you're diversifying your customer base, it can make your business seem more attractive. A business that relies on only a few major clients can be seen as risky. And then there's operational independence. Having documented processes and systems to make sure that your business is running smooth without you. This includes having an experienced management team in place to ensure long-term continuity. And then last is legal and regulatory compliance. And that's just making sure your business is compliant with all appropriate regulations, having necessary licenses, and that intellectual property rights, contracts, and other legal documents are well in order. When should I start preparing my business for a sale? And what do I need to know? It's never too early to start preparing your business for a sale. Ideally, you should begin 2 to 5 years before you actually intend to sell. Here's why and what you need to know. First is time to optimize your value. Preparing early gives you time to address any weaknesses in your business, optimize your operations, and ultimately increase your profitability. Then there's just the financial preparation. Buyers will want to see at least 2 to 3 years of clean and audited financials. This is why working with an accountant to ensure your financials are well documented and reflect the true value of your business. And then there's succession planning. If your presence is key to the business, start training a successor or creating a strong management team to make sure that the business is attractive to any buyer. With this, you'll also want to make sure you have an exit strategy, and that's just determining whether you want a full sale, partial sale, or if you're open to a management buyout. And last is just understanding that there's going to be a due diligence process. You need to be prepared for a buyer's due diligence process. This involves reviewing contracts, employee agreements, leases, patents, and other customer agreements, among other documents. What are the tax implications of selling or transferring my business? Selling a business can trigger significant tax consequences. Understanding these implications are going to be vital for effective planning. First, it starts with a capital gain tax. In Canada, selling a business often results in a capital gain, which is taxed at 50% of your marginal tax rate. You may be able to use a lifetime capital gains exemption on the sale of the qualifying small business corporation shares to reduce that tax. Then it's important to understand the difference between a share sale and an asset sale. Selling shares may offer more tax advantages for you as a seller, while buyers may prefer asset sales for tax and liability reasons. In the case of an asset sale, it may lead to different types of taxes, such as recapture of depreciation and income tax on your inventory. If you plan to transfer your business to a family member, there could also be opportunities for other tax planning, such as an estate freeze, which can help defer or minimize capital gains taxes. I'd be remiss if I didn't talk about retirement planning. Incorporate the proceeds from your business sale into your retirement plan to ensure that the funds align with your long-term goals and needs. Everyone's tax situation is unique, and therefore it's important to speak with your tax advisor for further discussion and analysis before implementing any tax planning strategies. How can I protect my business and personal assets from risk? Protecting your assets from risk involves more than just insurance. Here's how to safeguard both personal and business interests. First is having separate business structures. If you haven't already, set up a separate business structure. This can help separate your personal assets from your business liabilities, reducing personal risk if your business faces financial trouble or legal challenges. And there's liability insurance. Ensure you have adequate business liability insurance to protect against lawsuits or claims that can impact your overall finances. And then have contracts and agreements. Work with a legal professional to draft strong contracts for your vendors, employees, and clients. This reduces the risk of disputes and protects your business interests. Then there's succession and continuity planning. And this is just having a plan for unexpected life events, such as the death or disability of you as an owner or one of your key personnel. This includes key person insurance, which provides financial stability during any transitionary period. And then there's personal asset protection. And that's just using a trust or having legal structures to shield personal assets from potential business liabilities. And last, but certainly not least, having strong cybersecurity measures. In today's digital age, Protecting against data breaches and cybersecurity attacks is essential. This is just implementing strong security protocols to prevent any financial or reputational damage. So here are my final thoughts. Selling or transferring your business requires careful preparation and strategic planning to maximize value and minimize risk. By starting early, understanding tax implications, and protecting your assets, you can make the process smoother and set yourself up for long-term financial success. If you want a clear process to understand where you stand today, download my Business Owner Playbook in the link below. As always, don't forget to like, comment, and subscribe so you don't miss future videos just like this. Until the next one, take care.